Welcome to a new short update. We're going to talk about Bitcoin today because we are holding some crucial levels, but on the other hand, we are facing the FOMC. And the FOMC is a big event which is going to happen tomorrow, where we're going to hear whether or not we're going to have another rate hike. While we are already sure that we're getting towards the end stage of the hiking path for the FOMC or for the Fed, which means that there is some upside to be expected from the markets. And that's why we potentially are also seeing the bottoming fracture or bottoming structure on Bitcoin. So that's what we're going to discuss in this short update. But before we continue, this update is sponsored by Bitfavo. They grant you with 10 euros completely free if you make your first deposit, and 10,000 euros of free trading if you sign up there. And what we can do is that with Bitfavo, I'm using that as my DCA investment exchange, which means that I buy my assets every month slightly. It's the easiest to use exchange out there, and I'm using it myself. So if you want to start doing that for yourself and your portfolios, make sure to check that out in the description beneath. Now, when we're looking at the markets, we can see a few important things, and we're going to dive through them. The first thing we're doing is we're looking at Bitcoin. We're going to have an overview of gold and the dollar and the yields, and then we're going back into Bitcoin and the price action that we're currently seeing, in which we are having some momentum, which is driving the markets. And I think overall some altcoins are moving left and right. Some are doing the funding game. But it's going to be an important factor to see that we hold above a few crucial levels. And those crucial levels can easily be defined here, which is what we have here is the 200-week EMA. In the past few weeks, I mentioned that the 200-week EMA is an important indicator that we need to sustain on. And if Bitcoin is able to do that for a longer period, that is where the bottom is most likely being made. And in this case, if we're looking at the 200-week EMA, I mentioned that in this week we most likely are going to find ourselves into a bottom. We do, which means that if this week is going to show strength and we close above 26.5, there's a very likely chance that we're going to continue from there and that we're going to have an upwards trend. If we're looking at this chart, we can still say that 31k is the crucial barrier to break. Most likely, we're going to have a grind towards 31k in November, final correction, and then in January we start to break to the upside, as then the pre-halving FOMO starts to kick in, and then we most likely are going to see between 45 to 50k. Let's move towards the dollar. The dollar is currently on the edge of having a correction. I've mentioned that before, but we are having a pretty substantial rally to the upside, and the rally is actually fueled by the fact that we're still having hiking or hikes being placed by the FOMC, and also data not being as strong enough or not as weak as enough to drop the dollar. With the data what we're getting, the theory is that we're going to have more hikes, which means that we're giving more hikes. Most likely inflation is going to be sticky, and with more hikes we're going to see a continuation of the weakness on risk-on assets and strength on the dollar, which if we're looking at the monthly is definitely the case. But when we're looking at the weekly, we can see that we're facing resistance, and when we start to look at the daily, it is very clear that we're still trending upwards, and this didn't take place, so we held crucial resistances becoming support. There's one final one, which is 105.88. If that one fails to sustain a support, or that one is going to find itself resistance, most likely we're going to fall beneath and switch the trend. It is also very likely that we're going to lose this level here at 104.45, and then we can start having this downwards trend. So those are the two levels that we should be monitoring if we want to see a clear breakdown taking place on the markets. Gold in itself is also showing strength, finally. The crucial level that we had to hold for gold was the level that I mentioned here at 1900, because that was the previous support level, becoming support again, bouncing up, which means that we're currently facing a crucial resistance zone. And I think that if we are breaking 90.45, the correction is in, and most likely we're going to have a continuation for Bitcoin then too, because then commodities are showing more momentum, and through that we're also going to see more momentum in Bitcoin because the correlation between gold and Bitcoin is substantial. Looking at uranium is already making a breakout, and the price action here is very comparable to Bitcoin. We've had a big bull market peaking in November 2021. We've had a substantial correction bottoming in July and in March and in November. And now we start to break out already, which means that if you want to get yourself positioned, buying the dips on uranium makes a lot of sense. Now going towards the yields, we've got a pretty substantial wick here. That means that we might be hitting the top of this entire run, right? A massive bearish divergence tomorrow or Thursday with PCE, or next week, anywhere in between. We're going to find ourselves into data that's going to provide a case of a reversal on the yields. You can just plan it out already. This bearish divergence is most likely going to turn into a real bearish divergence, which is similar on the 10-year yields, which I think is going to be inevitable, that we're going to have a reversal here and then we start to have a substantial one. So what I'm expecting when it comes to FOMC, most likely we break to the upside with the dollar and with the yields, and then after that we start to reverse. This also means that I'm assuming that Bitcoin is going to have a slight correction coming out of the event, and then we continue to move. Now with Bitcoin's price action, what we can see here is that we've had a pretty heavy breakout to the upside, failed to hold crucial levels, retest at 25k, retest at 25.7, which was essential because it used to be that range before. 25k held here, and I said I want to get that entry if I want to get myself into a position, which we did. We bounced back up, 25.7 is holding, and since then we're just flipping levels, which means that with this case and this breakout, and it's actually holding the level here at 26.7, we most likely are facing 28k next. So what I'm assuming is going to happen is a break through the highs, fall back, and we continue to chop until we break to the upside. If 26.7 is going to be lost, I think that we're looking at 25.7 to 26k to buy the dip there. But overall, I think that the low is in, especially since we are holding above the 200-week EMA. Very short update, I know. Thursday I'll be back. Tomorrow I might be going live on FOMC. Check out my Twitter where you can find the updates. Have a wonderful day. Make sure to hit your longs on altcoins. Sign up to Bitfavo, and I'll see you again. Ciao.